Let's take a look at what's going on in big tech right now. Joining us is Dan Niles. He's Niles Investment Management founder and portfolio manager. By the way, this is Dan's first time in New York since COVID. Really?
Yeah, I mean, the last time I was on set was January 27th of 2020. And I remember that was the day Apple reported. And I remember being on set and they were like, well, what are you thinking? I said, I think this COVID thing is going to be a big deal. And I'm not going to be, and then I think it was Carl Kinton, he asked me, what do you think of Disney? Because it had come down a little bit. And I said, I'm not interested in that until they shut down every single one of these parks. And then I looked stupid for about 2 weeks. And then I didn't look so stupid.
Wow.
So I remember that trip very well.
Any big proclamations this time around?
Yeah, the big one for me is really simple, which is you had U.S. GDP in Q1 come in, and the part that I don't think people paid enough attention to is U.S. GDP is 25% of global GDP. Mm-hmm. You had imports up 41% in Q1. Now, if that's not pulled forward in demand, I don't know what is. And that's the reason why Q1 results for all of these companies came in well. Because don't forget, in the fourth quarter, when they reported Q4, 6 of the 7 Magnificent 7 companies had revenue estimates get cut for March. There's a reason things sounded so good when they then reported the March quarter. So you're going to get payback in the Thanksgiving through Christmas time period when people are expecting, big sales of smartphones or PCs or cars, things that people bought in advance, because consumers aren't stupid. They go, well, gee, if I've got tariffs coming, maybe I should buy a few of these things I was thinking about that are high-priced goods in advance. And so that's why you're seeing companies like Apple doing well. In terms of the results they're reporting, I think they're going to have another good quarter. But when you are expecting 30 to 35% of your revenues in just the month of November and December for most, consumer electronics companies, et cetera, I think you're going to see a big disappointment because the numbers haven't been moved down because they came in good for March.
So you're still bullish in the short term, but longer term, heading out towards November, December, around Thanksgiving, you're looking for the market to catch up to that reality as you see it?
Yeah, because right now, let's face it, we're human beings, right? You want to believe you're going to get through COVID fine, you're going to get through a financial crisis fine, people are going to have kids, there's going to be productivity improvements. I'm doing an event later today talking about that. And so investing is just basic faith in humanity's resilience. So you want to believe, oh, CPI came in low. Oh, PPI came in low. That's good. Oh, Micron's going to spend $100 billion or whatever they announced this morning.
I think they just said $150 billion, and it's going to create some 90,000 jobs, but they didn't put a time frame on it.
Well, of course, that's the great thing, right? You don't have to put a time frame. It could be over the next 100 years. Who knows, right? But the point is that you want to believe all that good stuff and not think about, well, when you have 25% of the world's GDP up 41% in terms of pulling forward demand. Might that have an issue later this year?
So as a result, in your hedge fund, are you selling some of these stocks? Let's go specifically. Do you sell Nvidia based on this? Do you like Nvidia?
Yeah. So here's the thing. I think you got to take the Magnificent 7 and split them completely apart. So with Nvidia, we've been talking about since the middle of last year, we thought there'd be a digestion phase because training demand was going to flatten out. Nvidia stock went down 49% from peak to trough, right? And you did see training demand start to level off. We wrote about, I think in April, that we really liked Nvidia again because now you are seeing inference, which is it's answering your questions, like where do I go stay if I'm going to Mexico on vacation, blah, blah, blah. And so you're seeing inference demand really take off. Google's talked about the tokens they've processed being up 5x in Q1 of this year versus a year ago. And I'm using Gemini and Grok probably 20 times a day now, where a year ago, not that often.
Yeah, I'm using Perplexity and Chat GPT.
Exactly. And I think, Joe's probably using whatever he likes best. So all that usage is cranking up. And ultimately, that's what you want this for. You're not interested in, like, the trained model. You're interested in getting answers.
Right.
And so I think with NVIDIA at a 35 times PE, and don't forget, they had a big write-down. That's great. because you've basically taken everything you were concerned about, tried to throw it into the write-down, and don't forget their margins were under pressure for 6 months. They're going to be de-risked.
Nvidia at these
I
prices.
like Nvidia at these
What
prices.
about Microsoft?
Microsoft's the other one I really like. So those are the two out of the Magnificent Seven. There's a simple reason for it. Microsoft was invested in OpenAI in 2019. This is before any of us had even heard of ChatGPT. And so their revenues for Azure, which is their cloud business, actually after disappointing in June, disappointing in the September quarter, disappointing in the December quarter, that's why I was worried about digestion. You get into the March quarter, their revenues actually accelerated by 2% in March versus December for Azure. For Google and for Amazon, which is the largest, their revenues actually decelerated by a couple of percent.
Okay.
So after 9 months of disappointment, they're, I think, starting to benefit. And don't forget, they did this Stargate initiative where they said, we don't have to take all of the OpenAI traffic. All the stuff we don't like, we have the right of first refusal. We can turn it over to somebody else. And we haven't talked about Oracle, but Oracle obviously last night had huge numbers driven by this inference as they look forward for this next fiscal year.
All right, Dan, I'd love to continue through the rest of the Magnificent Seven, get your thoughts on it. We're out of time, but you did mention that you're going to be headlining at this event coming up later today. That is the first CNBC Pro Live event. That's later today at the NYSE, and we're glad you stopped by here first.